A massive shockwave just ripped through global trade, completely rewriting the rules of the game overnight. And it's setting up a massive tug of war with trillions of dollars hanging in the balance. So let's get right into it and break down what on earth just happened.
Okay, just look at this number for a second. That's $1.75 trillion. Let that sink in. This isn't just some abstract figure. That's the high-end estimate of tariffs the U.S. government might have to pay back.
So you gotta ask, what happens when a number that big is suddenly injected back into the economy? I mean, we're talking about a potential tidal wave of cash heading straight for the pockets of some of America's biggest companies. And that is the bombshell we're unpacking right now.
All right, so where did this all come from? It all kicked off on February 20th, 2026. The Supreme Court hand down this landmark 6-3 decision. And what they said essentially was that the president had overstepped his authority. See, they were using this old 1977 law, the International Emergency Economic Powers Act, or IEEPA, to slap on these broad global tariffs. The court basically said, nope, that's Congress's job. And just like that, poof, existing tariffs were invalidated, and the doors swung wide open for this absolutely colossal refund.
But, if you thought that was the end of the story, you'd be wrong. Oh no, this was far from over. I mean, within hours of that ruling, we got the counterpunch. And it was a move that threw global supply chains right back into total chaos.
So here's the pivot, the big shift in strategy. The administration didn't just sit back. They immediately activated a totally different law, Section 122 of the 1974 Trade Act. And the huge difference, the thing you really need to pay attention to, is right here. The old law, unlimited. This new one, it's got a hard 150-day time limit. What does that mean? It means an insane, high-stakes ticking clock just started for pretty much every business out there.
Okay, so right now, we're all trying to navigate this incredibly complex legal maze. And this table here really breaks down the 4 key pieces of the puzzle. You've got IEPA, that's dead, which is what triggers that massive refund. Then there's Section 122, that's the new temporary 10% global tariff. Then you have a new Section 301 investigation looming, which is the threat of long-term, targeted tariffs. And finally, Section 232, that's the one protecting U.S. steel with a whopping 50% tariff. It's still on the books, completely untouched. It's a total minefield of policy, right?
Okay, but with all this chaos, there are always opportunities, right? So let's ask the big question. Who actually stands to win from all this traumatic policy whiplash?
Well, the most obvious winners, the ones right at the front of the line, are the refund beneficiaries. We're talking about the absolute giants who import just staggering volumes of goods every single day. You see the names right there: Costco, Amazon, Target, Walmart. For these guys, this isn't just a little bit of good news. No. This is a potential multi-billion-dollar cash infusion shot straight into their balance sheets.
And you can see the impact clear as day right here. For the last year or so, those tariffs have been just squeezing their profit margins. So this potential refund, it's like a massive shot of adrenaline straight to their bottom line. We're talking about an overnight boost to their financial health. But, and this is a big but, don't go expecting cheaper prices at the checkout. Most analysts are saying these companies are probably going to pocket that windfall for themselves.
But listen, it's not just about retail. There's another group of winners here, what you might call the sheltered winners. On one hand, you have the tech and AI giants. Think NVIDIA, Palantir. They have these huge margins, so they can absorb these kinds of shocks. Plus, think about it. When retailers suddenly get all this cash back, what do? They spend it on tech. And then on the other hand, you've got U.S. materials companies like steelmaker Nucor. They're still sitting pretty, protected by those heavy Section 232 tariffs, which gives them a massive competitive edge right here at home.
Okay, this is where things get really interesting. Let's zoom in on a super fascinating and really crucial piece of this whole puzzle. We're talking about Taiwan, and specifically how a very unique trade deal is basically acting like a powerful protective shield for them. So what we're looking at is the Agreement on Reciprocal Trade, or ART. And the thing you absolutely have to understand is this. It sets a hard 15% cap on tariffs. But even more important is this non-stacking clause. What does that mean? It means no matter what other global tariffs get thrown around, Taiwan's rate can't go over that 15% ceiling. It's a total game changer for them. And this is where the strategy gets really, really clever. Just look at how TSMC, the world's most important chip maker, is playing this. First, they commit to these massive investments in the US. What do they get in return? Well, that unlocks huge tariff-free import allowances for all the equipment they need. So not only does this shield them from the whole tariff war, it actually helps them widen their competitive lead over rivals like Samsung and Intel. It's brilliant, really.
Okay, but this whole story isn't just about winners and clever backroom deals. Not at all. We need to pivot now and talk about the flip side, the hidden risks, the landmines that could literally blow up for unsuspecting companies and for the rest of the economy.
So, if you're one of Taiwan's traditional manufacturers, making machinery or auto parts, that 15% tariff cap sounds like a dream come true, right? I mean, it's a massive relief after staring down the barrel of 20, even 30% tariffs. But, and you knew there was a but coming, there is a really nasty catch buried deep in the fine print.
And here it is. It's called the Derivative Products Rule. This is the landmine we were talking about. Basically, if a Taiwanese machine has too much raw material from another country, let's say Chinese steel, it can completely lose its 15% protection. And instead, it gets slammed with tariffs as high as 50%. Think about that. This kicks off a massive, urgent scramble for companies to verify and maybe even re-engineer their entire supply chains. It's a compliance nightmare of epic proportions.
All right, let's zoom back out to the big picture, because there are major risks here for pretty much everyone. That new 10% global tariff, you can think of it as a hidden tax on all of us, on consumers. It's going to push prices higher and could keep inflation sticking around longer than anyone wants. And for the bond market, well, that's just bad news. Sticky inflation makes it way harder for the Fed to even think about cutting interest rates, and that, in turn, hurts the value of long-term bonds. Okay, so we've gone through the ruling, the crazy reaction, the winners, and the very real risks. Let's pull all of this together now. What does this actually mean for you? Let's build a clear strategic playbook for navigating this brand new landscape.
All right, here's your playbook. First up, focus on quality. You want to look for companies with real pricing power. Think tech and AI. Second, be tactical with retail. Yeah, that refund is a nice short-term sugar rush, but you have to be wary of what comes next. Third, and this is crucial for industrial stocks, check that supply chain. You have to verify they aren't exposed to that derivative products risk. And finally, if you're in the bond market, you might want to manage your duration. Shorter-term bonds could be a much safer bet in this kind of inflationary environment.
This whole wild ride leaves us with a really big question. A question for the modern economy. In a world with this kind of policy whiplash, where the rules can change overnight, is a company's legal strategy now even more important than its business strategy? It's really something to chew on, isn't it?
And so, this is where we're left. The countdown has officially begun. A new 10% global tariff is now in effect. But that clock is ticking for only 150 days. The one question hanging over everyone, over the entire global market, is what happens on day 151?